Hi there people, hope you're all well and welcome back to the YouTube channel. So this video here we're going to be breaking down a breakout strategy which I know quite a few of you will most likely enjoy, mainly because if you are someone that can't wait in trades or wait for trades, there is a lot of trades to be taken using this strategy. Okay, so what we are going to do, I'm quickly going to break down the basics of the strategy, which will take a minute, and then what we will do, we will go over some live examples as well, and potentially even go onto the live charts and see if there's any positions that we can take. So the basis of the strategy is a reversal strategy. So if we are looking at the market like you can see on the screen, price is pushing down, creating something like this, and then once price breaks the lower high in a downtrend, you are going to be trading the breakout of that. Now, there's going to be entry requirements and things that you will see in a moment, but this is basically the basics of the strategy. If price is pushing up, you are waiting for price to break this area here, which would be the high or the low in this example, which made the high. Once price breaks that area, you are then short, and obviously, there you go. So what we will do initially, I just basically want to show you an example or a couple of examples of this happening, okay? So if we are looking at this market here, we don't need to be too zoomed out. Being zoomed in is absolutely fine. All we are basically going to be doing is waiting for price, when price is moving down, to create a new high, okay? So in this scenario here, you can see this happened here, where price created a lower high within the market. Okay. So what we are then going to do when we are identifying a downtrend where price is moving down, if you've not seen previous videos, obviously go look through the channel. You can see that this is the area I would be looking at. If you want to play it safe, by all means, go over the wicks. But for me, I would say the candle bodies is more than enough to take a position. Now, all we are waiting to do is price to break this area here. If price was to continue pushing down, then irrelevant, we're just going to wait, okay? So based on what we saw initially, you can see here that price has now closed above your lower high within the market. As well, if you want to look at kind of like the characteristics of the market overall, price created a low, created a lower high, and then this now is a higher low. So this could indicate that the market is running out of that downward steam that it initially had. Okay. So besides using the breakout, you can also start to look at the structure within the market up until the break to then obviously find your buyer. So for me, price has obviously created a lower high within the market. Price has then closed above it. Now we are looking to enter. So once price closes above your area of interest, that is when you are going to look to get into the market. So as you can see here, price broke. So what you would do at the end of the minute, you could enter the trade. Now, there's a couple of options regarding your actual entry and your stop loss and your TP. The safest option, because it's a trend reversal, you're implying that price is going to continue pushing higher. Then you could say, I want to be safe and cover in this scenario the low. If we just circle it here, that is obviously part of this push because realistically, if market structure was to change, price shouldn't come back below that low. Okay, and that's basically the long and the short of it. Now, that is option number one, and this is where you're going to have to make a decision yourself. Option number two, and this is going to differ trade to trade, would be just to cover the bottom of the candle that is doing the breakout. So, okay, so that's option number two. Option number three would be basically just to put your stop loss below the level where price has broken. Okay, and then that is basically your three stop losses: market structure, the previous candle, or below the level that you're trading. Okay. For this example here, I'm just going to use the candle just because I personally like that way. And that is something that I would do if I was trading this way. Now, regarding your TP, there's a couple of options. If you are like me, I like to personally use runners within the market. So for that reason, if I am looking at a trade, I will usually take my profits at 1-to-1, leave a runner, and then in the future, use that runner to risk more on the counter position, which I can touch on in this example here. So let's just assume, for the sake of the video, that we are aiming for a 1-to-1. What you might potentially want to do is say that this would be your TP1 as a point of market structure, or you could even go somewhere like that. Okay, so up to you what you do regarding your TP. Test what works for you, test what you want to do, and then see what happens. So we've identified the trend is moving down, we've had a change in market structure, and then all we are doing then is staying in the position. You can see price did actually retest the high, and then as you can see, price has then pushed up. This for you might be our TP1, which would be 1.5-to-1. I personally would have maybe taken the 1-to-1, and then now you are in the market. You are simply just waiting. You can see price went straight up to that market structure there for a 3-to-1. So let's just assume that I took TP at 1-to-1. I have my position size. I'm still in the position. Everything's good. Nothing changes with this now. I would simply be waiting for another market structure shift. So if we are looking at this market here, let's just see. So price has created a high. Now it's created another high. So if I'm looking at an uptrending market, what am I looking for price to break? I'm looking for price to break the low which made the high. Okay. So what I would do is I would wait to see if price was going to close below this level. In this scenario, yes, it did. Okay. So with this here, you might say, I'm not too comfortable with that being a close. You might want to wait again if you are doing the wick versus the body, but it's up to you. Test what works for you. So let's just assume, there you go, that is your break below. Enter the position. If we're entering realistically in this scenario, previous candle, and then same again, 1-to-1. So what I want to show you following this is that you've had a change in market structure. So if we break it down, price is pushing up, creating new highs and lows. Price created a higher low, pushed and created a higher high. But then now, if the trend is to continue upwards, price should not break this area, because obviously we're in an uptrending market. If price breaks this area, it can indicate that the buyers are losing control. Okay, so we're now in this position. And as you can see, if we just play it out, let's see. So I've got a sell limit filled as well on my account. And then there you go, that is that. Now, what I want to break down when it comes to the actual runner side of things is, let's say I risked $100 on this trade, okay, for easy maths. So if I'm risking $100, right, I have taken at TP1 $50 profit, okay? I've now I've banked $50 profit from when price hit 1-to-1. I've now got $50 running. When I entered this position, what you can do is say, if this trade was to lose, as in the sell, what would my buy be running? My buy would be running 3.5-to-1. Okay? So if you are looking at that, what that means is that your $50 runner is running 3.5-to-1. So you are doing 50 times the 3.5, and then you're looking at 175. So then I'm able, following this, from only risking $100, I've banked 50, assuming I did half. And then following that, I've been able to risk 175 on the sell without risking anything. Because if this buy continues and the sell would have lost, I could just close the buy. So the buy is running 175 if this trade was to lose. If this trade loses, I close the buy and I've still made $50 overall. However, now, for every one that this runs, is that because at 1-to-1 I am taking 50%, then obviously what I am looking at is that in this scenario here, I would be looking at about $87. So then I've banked $87 from the sell, and I've got $87 now running for every 65 pips. And then if you can see, look, price continued down. So then, even running 3-to-1, you've got 87 times 3. So rather than just taking your normal TP, that is the way I would do it. Now, if that's too complicated for you, you might have a fixed risk to reward. So in this scenario here, if you're selling, you might be like, well, where's the next point of market structure? you've got somewhere like that. You could maybe target the entry of the previous, whatever you want to do regarding targets. As you can see, 4-1. So all you are doing is waiting for the market structure to change, entering with the breakout on the 1 minute candle, and then following that, you're in a good position. So same again here. Let's just see what happens. This scenario here, price is pushing down, created a lower high, exact same scenario as what we saw here, because what you can see is that price created the lower high, it failed. Let's just go on this. It failed to create a lower low because this low is higher than the previous, so that could indicate. And then what you could do, again, if you wanted, it's completely up to you, do something like that, and then obviously, there you go, boom, another one. So a very simple strategy, guys. And as you can see, if you'd have used my runner approach, this trade would have been running 3-1. So what was originally, if I do this, what was originally $100 risk turned into $175 risk free. And then that $87 was running 3 times, which is then, if I do the math, say about 260 is what this would have been. So I've originally risked $100 on a position. That's one. I've banked 50. I've then taken the sell, which is then still obviously one with the increased risk. That's then run into a buy, increased risk, and that is exactly what I've done. So let me just have a look now on the actual live markets and let's see if there's any positions or obviously changing characters that's happened on the live markets. Okay, so you can see price is pushing up here. So I'd be interested in that being broken. Okay. Price here. Let's have a look. Same again, nothing much has happened. But what can you see here? That high was broke. What am I saying now? Price was trading down, then broken the low, and then there you go. That's a nice reversal. EN. Same again. There's nothing live. Again, I'm just seeing if there's anything live. GA here. Same again. Nothing. GN. Nothing. GCAD, let's have a look. And again, there's nothing wrong with this. It's the 1 minute as well, as you can see. That's from some drawings earlier. Let me just get rid of them. But as you can see here, price is just kind of ranging sideways. So realistically, guys, based on the live markets, if I just get rid of all these drawings, based on the live markets, there's nothing live that I kind of did want to take, maybe something to show you. But again, all it is as you can see, this is the trade from before. This then was the other trade. Here, price is moving up. You've then had a break below there. So that's another trade here. And then as you can see, then this is kind of the market. So you can see that just based off this 1 minute strategy, there's a lot of positions that you can take. You are just waiting for the market structure to change. And then obviously you're in a good position to take a trade, guys. So if you do have any questions regarding the strategy itself, just drop them in the comments and I'll answer any questions. Obviously, links to the groups if you want to learn my strategy, follow my trades, all in the bio. But yes, guys, thank you very much for watching and I will see you next Thursday.